Hello, everyone, and welcome to another episode of Point Analytics Unplugged. I'm your host, Kshitija Deulkar, and today we are diving into something that is absolutely essential in the world of investment, that is fund accounting. And to help us unpack this fascinating topic, we have joined by Adarshjeet Panikar. He is a seasoned professional with over 15 years of experience in the investment banking industry. He's worked with some of the biggest names in the field, including Northern Trust, Bank of New York, and State Street. Over the years, he's led teams in fund accounting and performance analytics, mastering everything from calculating returns and analyzing expenses to ensuring seamless operations for mutual and pension funds. Adarsh, it's a privilege to have you on our show today.
Thank you. Thank you, Kshitija.
So, fund accounting is a really interesting topic. And to begin with, Adarsh, can you throw some light on this topic, fund accounting, and what do we do in there, etc.?
Definitely, Kshitija. I think to start with, fund accounting, as the name itself says, it's a process that is particularly focused on accounting for all the A to Z of the activities that happened into an investment fund like mutual fund, hedge fund, private equity, etc. And today, like you, me, and many more have exposure to mutual funds, ETFs, and also to other asset classes like maybe gold, FDs, for example. And like any investors, we always like to have a clear idea of the value of our investments, how what is the growth trajectory of the investments, etc. Right? And apart from that, mutual fund as an asset class is highly regulated, and hedge funds, private equity, if I want to say, to a certain extent, right? So when we talk about mutual funds, ETFs, the regulators definitely want that the valuations are completed, the NAVs are calculated and disseminated to the public. Sorry, to regularly. And when it comes to fund accounting, so the entire valuation process is taken care by fund accounting. Apart from few other things, like it also aids performance measurement, financial reporting, audit, etc. And you might have heard about the term NAV, right? NAV is like the bread and butter output of fund accounting. I mean, the its primary objective. And to sum it, I would say fund accounting as a process can be handled by the fund house in-house within itself, I mean, or can be outsourced to financial consultants externally and typically referred to as fund administrators. And this kind of a practice is very much relevant into developed markets like US, Europe, etc. Yeah. Thanks, Shruti.
Okay. So that sounds interesting. So now that you have talked about NAV net asset value, can we have more insights on it?
NAV, right, the net asset value, is essentially reflects the per unit value of a mutual fund unit. And investors would typically use it to understand the value of their investment. And like we said earlier, like many other things, there are multiple applications for NAV. And on how the NAV is calculated, the formula is pretty straightforward, right? It's assets minus liabilities divided by the outstanding units. So assets will have the market value of all the portfolio assets plus cash balances. It will also have the any receivables that are in the fund, the value of dividend accruals, interest accruals, etc. And to talk about the liabilities, it will be more about expenses. It will have the value of all the different types of expenses, right from your management fee to custody fee, etc. Any payables that are sitting in the fund, and that should be it. That should be pretty much what when we talk about liabilities. And finally, on the outstanding units, it's nothing but it will reflect the total outstanding units, the outstanding units that are held by the investors for a particular share class. And as you would have noticed that these assets and liabilities have few multiple items, right? So arriving at appropriate correct values for these two buckets becomes key. And there are several important checks and procedures that undergo and help arrive to these appropriate values. Yep.
Got it. So just now you discussed about NAV, Adarsh. I believe it must be having multiple important steps involved to finally compute the NAV. Can you shed some light on these aspects as well?
Yeah, great question, Kshitija. I would say the NAV calculation entire process is itself critical and has multiple steps, so that ensures not only accuracy but also compliance. So, as a quick summary, I would go through some of the main important steps that are involved. So, to begin with, I will speak about dealings. So, when I say dealings, dealings is a term which is particularly used to refer the subscriptions and redemptions that happen into a fund. This particular term is mainly relevant for open-ended funds. So the day for the fund accountant will start with ensuring that all the deals, the subscription redemptions, are processed into the fund that are relevant for the valuation day. He will also ensure that the outstanding units do reconcile with the TA reports, that is the transfer agency agent reports. So the next on the list would be expenses. So we will ensure that all the expenses accrual for that particular day are charged to the fund. It will also ensure that any expense payment backed up by relevant invoices are processed. So followed by that, we can move on to the step for trades and corporate actions. So this particular step, as the name suggests, that it will ensure that all the trades executed by the fund manager are processed, backed up by the trade blotter. Trade blotter is nothing but the trade file. Apart from that, corporate actions, any relevant corporate actions, right from dividends to any others like stock splits, spin-offs, etc., are also processed. After all these, we can move on to the pricing. So pricing ensures that the portfolios, the fund's portfolio is does reflect the actual market value. The assets are priced at the valuation day prices. After prices, we have this reconciliation. So reconciliation, I would say, forms an integral control mechanism, right? So commonly we see that reconciliations are processed versus the custody books. But apart from that, certain funds can have reconciliation with the prime broker or the fund manager's books itself. And some of the common types of reconciliation would be cash positions, dividend accrual, tax reclaims, etc. So reconciliation ensures that each and every activity is correctly reflected into the fund. Apart from that, it helps to identify any discrepancies and its timely resolution. So apart from that, any other bespoke steps that would be particularly relevant to a fund like TR adjustments or any fair value adjustment, right? So these are also taken care of. So once all these steps are done, so we'll, to make it as a quick summary, we'll have values for the formula which we discussed earlier, the assets liabilities. We'll have the appropriate values of assets liabilities, outstanding units, and it will help to compute the NAV. So most of these steps would be aided by robust systems, but these are some of the common steps involved. Yeah,
Got it. So,
yeah.
expenses being such an important aspect of funds, how is this ensured that we are on top of it?
Yeah, sure, Kshitija. So expenses are again very critical, and if handled inaccurately, expenses has the potential to cause multi-period errors. So it's a very unique feature of expenses. And allow me to add in here. So expenses adhere to this accrual accounting concept, right? So wherein each day the fund is charged an accrual based on the actual liability, expense liability. So allow me to take a small example. So assume that the fund is liable to pay a $365 as an admin fee at the end of the year, like 31st of December. So each day starting from 1st of Jan, the fund will be charged $1 each day, right? So this $1 is actually a tiny amount compared to a TNA of the fund. So if for any reason the accrual process or the daily accrual charge, there's some inefficiency or the process breaks down. So because of this tiny daily accrual charge, it would be difficult to identify it at the very initial stage of something going wrong. And by the time we find out this error, it would have actually grown much bigger. And that's why I said that it has a potential to cause multi-period error. As a mitigation, we have robust checks and daily checks and controls in place. Not only these daily checks, we also have monthly reconciliation of expense accrual to ensure that we are on top of this process. Yeah.
Okay, right. So you're right, Adarsh. Expenses are definitely crucial, but what about corporate actions and pricing? I imagine they come up with their own challenges too. So could you share your thoughts on the same?
Sure, Kshitija. So all the steps we actually initially discussed are very important to the entire fund accounting process. And pricing and corporate actions, if handled inaccurately, definitely will have huge impact to the valuation process. To begin with, I can say we have credible sources along with backup sources that relay real-time pricing and corporate actions feeds to us. And to talk about corporate actions, right from plain simple events like dividends to complex events like spin-offs, etc., are processed by our corporate action specialists with robust accuracy checks in place. So to talk about pricing, pricing team too does their internal QC checks like tolerance breaches, etc., and ensures that the portfolio securities are priced with the valuation day prices. So when you handle any OTC asset classes like total return swaps or other type of OTC asset classes, we need to be furthermore careful. So reconciliations, expense exceptions management as a process, these are all very important to flag out and resolve any discrepancies. To sum up, I would say process, data, systems, and team expertise all play a key role. And we at DPA ensure that we excel in all these aspects. Yeah.
Got it. So that was interesting. And what I've understood as of now is fund accounting seems to be a very complex process and it must need some robust controls. Can we get some insights here and also to add in how has automation helped?
Yeah. So, like you rightly said, fund accounting does has some complexity. So, the type of fund structure, the number of asset share classes involved. So, whether the share classes are hedged, unhedged, and also importantly, the type of asset classes the fund is expected to invest. All of these adds to the complexity of the process. So the entire process itself needs some stringent controls and has largely leveraged upon automation to aid efficiency and accuracy. So to make it short, I would say if I want to pick on the control side, I can pick the humble checklist, reconciliation and exceptions management as some of the important controls. And automation has touched almost each and every aspect of fund accounting process, right? Right from corporate actions and to pricing, etc. To cite an example, for instance, the traditional checklist, the transformation of the traditional paper checklist to a modern paperless checklist, right? So I would sum it with saying that automation has helped to enhance the overall productivity, efficiency, and accuracy of the process.
Okay. So controls are key aspects indeed. So once the nav is done with, are there any further aspects to be completed to conclude a fund accountant's day?
Of course, right. Once nav is done, I think the majority of the task is done. But there are a few other things which the fund accountant takes care of, and it's more so related with reporting part and then getting ready for the next day. So we at DPA have the ability to build and share exhaustive list of reports right from cash summary to asset and accrual detail reports, expenses summary, you name it, and we have it. Right? So that's pretty much. And fund accountant team will also take care of any discrepancies that were observed during the day, right? Any queries that need some back and forth. All these are taken care on the post valuation time.
Got it.
Yeah.
So great. Finally, to conclude, among mutual fund accounting, hedge fund accounting, and private equity, which is the most challenging one?
So good question, Kshitija. So I would say when you talk about mutual funds, it's far more standardized, right? So, but most of the mutual funds have a daily valuation cycle. So the NAV needs to be completed for each business day. So the NAV window is tighter. These funds typically have a larger trading volume, particularly for the open-ended funds. So, so there would be high pressure to complete or research or resolve any accuracies within that tight NAV window. So the pressure would be high. And to talk about hedge funds and private equity, these are largely very bespoke in nature, particularly around expenses, their valuation procedures. but the actual valuation, I mean the live NAVs, is completed normally on a monthly cycle. And for certain private equity funds, the valuation is done only 3 months, right? So that's there is sufficient enough time to resolve any discrepancies because of this larger valuation periods. But because of this bespoke nature around expenses and around the pricing, there will be a large number of back and forth between the fund admin and the client. So to sum it up, it would be difficult to pick either one, and as both these presents their unique set of challenges.
Got it. Okay. Thank you, Adarsh. It was pleasure to have you on the show, and thank you for sharing these insights with us today.
Thank you, Kshitija. My pleasure. Thank you.
And to all the viewers, thank you for tuning in. And just keep on viewing our Decimal Point Analytics Unplugged series. And hope you found this discussion really insightful. Thank you.